Hey, what's up? It's Justice again from the chats. And this morning we'll be coming back to look at our Bitcoin that was analyzed, I think it was 2 days back. Thereabout, I left the analysis the way we kept it. And okay, the quest was if it breaks down, we will be going short here, a further deep short, and we'll be expecting something of this sort, then a retest, then a boom. And it came down, but what happened? It did not close down. Okay, let's go to the daily time frame to experience the view more. Let me just open the screen so you see it clearly. I don't want to touch these arrows we drew, so we're using it to track and test what we said. I think it will be good that way, so you see as we do. So now the question was, it came down. Now let me explain a bit of fundamental analysis to us here. God, how do I do this thing that you people will be seeing it clearly? Now see this volume. Fundamentals is all about using the volume you saw. Now some persons might still call it technical, but fundamental speaks more of the volume than the chart view itself. Fundamental as well talks when you decide, okay, I want to run a fundamental check or a fundamental analysis about Apple. Instead of on a normal years back, you might travel to their head office and would want to go through their projects. You would want to know what they have as projects before investing to them. You would want to know what their past records has been during the period when they are to run a project. You would want to know the trend of their stock, if they've been making profit seasonally or it has been a dip for them. That is what fundamental is. Technical is making the thing easier. Technical analysis is giving you a graphical format of the market. I hope we're understanding, giving you a total graphical view of the market. Now, there's a little of fundamentals in technical. And what is a fundamental part of technical? This to the volume. Now, the volume here helps you to see the amount of trade that goes down. When we see the amount of trade, which means trade is a two-way stuff. For something to be called trade, it has to be two-way. What is that? Buying and selling. So the amount of trade that happens during a particular time frame observed is what ends up giving you a candle. Now we are on the daily chart view, which means a candle represents 1 day, a bar represents a day close of the volume. Now yesterday's volume, okay, now this was yesterday's volume. Now yesterday's volume closed as sellers having it bigger in the market. Okay, now the look of this volume yesterday looks larger than that of day before yesterday. Now you could see the volume records here, the price here under volume. Now just check, when I'm on yesterday, you see it's on 601k, and day before yesterday was 411k that was traded. Now meaning yesterday's trade was far larger. Now let's see what is trading today. We are already trading 128k, which means today will be a large market day, because we have like 17 hours to go already, and 129 trade has been closed already. So now the volume yesterday was larger than the day before yesterday. Now let's go and see the candle. This is why technical analysis adds to the sweetness. It shows you the candle. Let me just adjust this to the beat. You already know what it is now. Now see, look at the nature of the candle. The nature of the candle is unlike looking like a shooting star but in a reversed format. Shooting star is when it's facing the downward path. Now this is more like a shooting star. This candle here, this green candle, it's more like a shooting star. Now this particular candle nature is what we are seeing here, but in the reversed. Okay, so if it's looking like this and the volume is this strong, it tells you that the buyers were strong but the sellers held the market till it closed yesterday. This is just the explanation. The buyers were strong but the sellers held the market till it closed. So in such market, it still tells you we are consolidating. It will be stupid for you to rush into this market and be like, I'm seeing there is full pressure up, which means we should go up. It's a lie. Stay there. And unfortunately for us, or should I say fortunately, because it's all in good, we've already been triggered, because I just said, okay, if we are to be entering this trade, I am going to be entering when it breaks out. And it has broken down, but it did not close down. What is closed down is when the market time elapses and the body of the candle is shown down here, not the wick, not this rejection. Are we going together? Now already we have already started today, and already the sellers are already taking back their market, and look at what it's looking like. So this is the look on a daily. Let's go to 4 hours now. Okay, let me, before leaving to 4 hours, I just on one of my indicators, my mostly used indicator here, RSI. Let me delete this stuff if it will even go safe. Now RSI. Now this RSI is measured with SMA, which is simple moving average. And if you're using the latest TradingView app or software, whichever one you're using, this is what it will look like for you. So it is below the 50, the average level, which is 50, and it is about the RSI line, which is my white line here, is about to cross the simple moving average. Now once it crosses the simple moving average, it's called a dead cross, and once the dead cross happens, it's signaling a further dip, that the sellers are strongly in this market and it will be deepening further. That's just the explanation there. So we go to 4 hours. Now 4 hours, look at what we are observing here. Now check out this trend. Even in a consolidated market, there's a trend there. What is trend? Something happening back to back. That's just the layman definition of a trend. But what is trend in such in analysis and in trading? It is the price moving towards a particular direction at a longer period of time. So now this is just a back-to-back reaction. Buyers hold it, then the sellers pull, and it consolidates. Buyers think they are holding, it goes to hit the resistance, sellers pull. Now for swing traders, people that understand what swing trading really is, they will be eating from this oscillation. Buy here, sell here, buy here, sell here. So buyers think they will hold it, then pull, and sellers hold it back. Buyers will take it back up, pull, sellers bring it back down. This is just the trend that was happening, and boom, it has gotten to this level, and the buyers still, when it was about breaking out, the buyers still thought they could handle it, and they rejected it back up on 4 hours. But see what is happening. The sellers are not even giving the market a chance to break out, which means this our movement here might be very correct. And looking at the RSI has already given up. It has crossed already, it has bounced on this level, and it is coming down. Now the trend with the RSI is that when it gets to this depth, it reverses. Now your question is, would it reverse this time? Because it got to this depth, it reversed. It got to this depth, it reversed. It got to same depth. It is a steady stuff, which is a trend. It is a trend. Now trend does not really mean it has to be going up or coming down. Trend really means, what is the market repeatedly doing? That is how you make your money. You trying to observe what the market does on a constant, on a regular, and take advantage of it. Like what has been happening for a while here. Go up, come down, This is your first, you've made one money here, you've made another profit here, you still sell it short, you make profit, you buy it long, you make profit, you sell it short, you make profit, you buy it long, you make profit. But guess what? You are waiting though. You sell it short, you make profit, you buy it long, maybe you make profit, then you sell it short. Maybe here you now get to buy it long again, you might make the profit. So this is just a trend, you observing what the market might be doing on a regular and taking advantage of it. Just that nobody sees the future to say it will be going down and up, going down and up. But this is what analysis gives. It gives you a steady insight. Now you've understood that it has been happening back to back. The question is, would it break further down? Now, how this candle close in the next 1 hour 24 minutes matters to you if you would enter to go up, as far as you are swing trading this level. So now this class today is just to show you that okay, we've been triggered. Now let's see what happens. Though we were triggered with the rejection, the market did not close below, but let's see how today closes, because the close of today matters a lot. Click on the subscribe button if you like the content you're getting. Give me a thumbs up, and also on our comment section give us your request on pair to chart. We deal majorly with the crypto phase of the market, but if you have a pair in the forex, or you have an issue in forex trading that you would want a clarification to, who are we not to do that? So give us a like, a thumbs up if you like the content you're getting, and please add to the comment section what you really need to see on this channel. Have a safe day. Bye bye.